Okay, folks, good morning and happy Friday. This is Bob Desmond at the Contrarian Trader, and welcome to Swing Trading Today. What we're going to talk about today, first off, are the headlines. Are we going to war with Iran? Then we're going to segue over into the pre-market activity, and then we will talk about members' stock chart requests, which is where I review the symbols that our members submit for me to review on video. So let's begin with the headlines. This morning we wake up. U.S. releases smoking gun video of Iran's Navy handling mine on tanker. I took a look at the photo, read the article, looked at the video, and if anything, it leaves more questions to be answered than they do answer questions. Were they removing the mine after the explosion? Was it an unexploded mine? I don't know. The video is grainy at best. It would appear as though it's before the explosion, but then why would they be removing mines? So I simply do not believe that this so-called evidence is sufficient to go to war. And this would not be an easy war. But there are certain undeniable facts. And the fact is that we have been ratcheting up tensions with Iran for quite some time. We have moved resources into the region, including B-52 bombers. Only a few weeks ago, we have armed the Saudis to the teeth, as well as the Israelis. So do I believe that we are going to war? It all depends upon the clarity of the president. There is no doubt that you have liberal Democrats who used to be for peace and love. Now they're all for war. And you have neocons on the conservative side that all they want is war. But they are the fringe. The American people are sick of war. We have been at war constantly for 20 years. So absent a really, truly big smoking gun, I think that if we launch a strike on Iran, which is, again, not going to be an easy fight, the president will lose the 2020 elections. Now, if these ships were to have gone down, the imagery would have been far more emotional. I don't think that we have the emotion. We don't have the support of the American people at this point in time. So I hope the president treads with caution. Now, if we begin to see Mike Pompeo and John Bolton visiting our allies and giving speeches at the United Nations in an effort to drum up a quote-unquote coalition of the willing to go to war, then we have a problem on our hands. Then you know we are going to war. And the first on board to support that war will be the Israelis and the Saudi Arabians, who we have armed to the teeth in recent years. So watch for the next move. That is the drumming up of support of our allies. If you begin to see that, begin to position for a strike on Iran. But given what we know right now, I don't think it's enough. Moving on to the pre-market activity. I want to begin first with a conversation with regard to the U.S. dollar. The last I spoke about the dollar was on, I believe, Tuesday's market wrap. Yes, Tuesday's market wrap. And I said we are putting in higher lows. We have broken out on RSI. And the RSI was indicating to us that we may get a rally in the U.S. dollar. And we got that rally. And now we are sitting yet again above 97 on the Dixie. Now, what's causing the strength in the U.S. dollar? I believe it to be concerns about war in the Middle East. You're seeing a flight to safety. How am I validating that? Well, if you take a look at the price of gold, gold is up in the pre-market $12.80. It was up higher, but the dollar has gained some strength very recently, and you're seeing gold pull back a bit. But both rallied yesterday, and they are rallying yet again today. The last time we saw a correlation between the U.S. dollar and gold for any sustainable period of time was during the Brexit vote and immediately thereafter. Now, right now, I'm going to give the edge to gold because it's all but a foregone conclusion that the Federal Reserve is going to cut rates. Economic data is not coming out strong. It's coming out very weak. they will have no choice. They are not backing off their rhetoric of 3% GDP growth. However, they're gonna cut rates. Go figure. And you had the president out yesterday jawboning down the dollar. So they want a weaker dollar. Larry Kudlow, his economic advisor, has been for a strong dollar. So I wouldn't be surprised to see a departure of Larry Kudlow very soon. And if he does leave, you're going to see gold rip. You're going to see the dollar drop like a rock. Because Larry has been a dollar bull for as long as I've been watching him on TV. Taking a look at the S&P futures, we are down this morning, just shy of a 0.25 percentage point. We are in a trading range. We've seen some bearish price action. I didn't want to short into it. We avoided the short. I want to wait until after the first rate cut before we think about shorting this market. I think that they are going to bid this market up. Despite the weakness we're seeing in the pre-market, they are going to bid this market up in advance of the FOMC meeting, which is next week. The NASDAQ, down over a 0.5 percentage point this morning. But again, while we are very weak in the pre-market, I am not willing to go leaning into the short side just yet. I think that after we get the first rate cut, the knee-jerk reaction of the market is going to be the wrong reaction, and that reaction will be to the upside. I believe that we'll have an opportunity to short into that strength. So we are showing restraint right now, and all we're doing is building our core positions and swing trading extreme oversold stocks. That's it. And our core positions are silver and gold. We have been hammering the table on silver and gold for quite some time now, and we are seeing monthly breakouts on all of these positions. Here is silver, up 0.75 percentage point in the pre-market. Let's leave off with Bitcoin, and then we'll go into members' stock chart requests. Bitcoin is setting up for a move higher. You can see that we're clearly putting in higher lows. We're long of Bitcoin. Here you have more support on Bitcoin. We broke out of this trading range, broke out here on the 12th, pulled back on the 13th, did a retest. Now it's off to the races. I think that we could rally up to the 9,500 level, which has been our price target for a few weeks now. So we are very bullish on Bitcoin. Let's segue over and into members' stock chart requests. Okay, for members' stock chart requests, we're going to be using TrendSpider. TrendSpider is the next level in automated technical analysis using artificial intelligence. They are a sponsor, and we have a discount code CT25Z. You get 25% off. If you're watching this video on YouTube, click the link below. Check out there. You get a 7-day free trial offer. If you're watching this video on the website, look above. Link over to their website. Again, CT25Z, 25% discount code. And TrendSpider is included with our silver and gold level memberships. Let's get to the charts. Let's kick things off with Amazon. We're going to use a weekly chart. You can see that we are up on the week, yet we are off the lows of the week. Let's take our drawing tool. Here's what we're looking at as resistance on Amazon. The 1940 level. We may see a rally up to that level, but keep in mind, we are off the lows of the week with one trading day left to go. You don't want to see topping action on a stock that's putting in lower highs, because if we get rejected at this lower band of support, we may just, in fact, pull down to this lower band of support. And if that fails, we're going a lot lower, probably down to this key support level here at 1471. Daily chart. Now on a daily basis, you could see that we have resistance above. Let's take off the daily trend lines. We'll put up an overlay of weekly support and resistance. Click of a button. All right, not much going on above on a weekly basis. Let's bring up a monthly. All right, so we're looking at mostly daily resistance. Let's bring that back up. Now, if we rally and close above this upper band of resistance and consolidate, you may consider getting long, but you need to put a stop loss right below the 1868 level, because that would be a breakout point failure. I would not buy Amazon until we closed above this support level. The next chart up, Apple. The last time we spoke about Apple, I had drawn this pennant formation, and we were rejected at the upper band of resistance, and we have, of course, subsequently dropped. We broke down below key support. Let's bring up some overlays. This is a weekly chart, so I'll use weekly overlays initially. There you have it. And we broke down below critical support. We have now been limping back up higher. We do have resistance above here, and we are finding some sellers up there. Now, on a weekly basis, we have a topping tail, much as what we saw with Amazon. So I can't be a buyer of these shares until we close above this resistance level at the 1941 level and pull back and do a retest next week. Then I would consider opening up a long position and looking for resistance up here at around the 205 level on Apple. But as it stands right now, much as what we're seeing with Amazon, we're seeing lower highs, and I'm waiting for lower lows. I'm very concerned about this market. Baidu, of which we just booked profits on, weekly chart. I think we have a dead cat bounce this week, coming off of an oversold condition relative to the third standard deviation Bollinger Band. The reason why we booked profits on Baidu is that we did get a rally, a healthy rally. We became overbought on an intraday basis. Let's bring up a 15-minute chart really quick. We booked profits right in here, anticipating a pullback, which came along with the rest of the market. Now we are limping back up higher. Let's go back to the weekly chart. So if we do rally, we could rally up and into this upper band of resistance here, which is declining at the 124.05 level and declining. Ideally, I would want to see a pullback to the $100 per share level. That was my ultimate price target, which was never hit. So it was first out, best out. We booked our profit. So I'm looking for a pullback to the $100 per share level. I would entertain a long trade at that level. But as it stands right now, we have rallied this week. We are off the highs of the week. It's a dead cat bounce. I am not confident that we will proceed higher. Might we? Sure. If we get good news out of China, meaning trade talks. Let's go to a daily chart. Yeah, you could see resistance at the 20-period moving average and a ton of overhead resistance above using daily trend lines. And even more important are the monthly resistance levels up at around the 125 level. Let's bring up a weekly overlay. Same deal at around the 125 level. You're going to have weekly resistance. So a lot of resistance above and not a ton of support below. If you bring up monthly again and not a ton of support below. So be very, very careful here. Let's leave off with Netflix. Netflix is flashing an outside reversal week and a possible head and shoulders setup, left shoulder, head, right shoulder. And here's where we're looking for a break on Netflix. Now, it may not break, right? There's a setup that's forming here that is fairly bullish, and that is an inverted head and shoulders setup. Here's your left shoulder, head, right shoulder, and here is your 45-degree neckline. If we rally up and through the 275 level, we're going a lot higher. So the jury is out. I think the odds favor bears. Going to a daily chart, at best we are in a trading range, and we are threatening a breakdown here. So I wouldn't go buying it. I wouldn't go shorting it. Netflix is a hold right now until it breaks out or breaks down. And that is it for this morning, folks. Everybody stay tuned for best stock charts for the coming week. That will be coming out on Sunday. Please follow me on YouTube and click that notification bell. And if you're not currently a member, sign up for the 14-day free trial offer and join a great group of people in our forum for great trade ideas and to get a second opinion on trades that you are looking at. Everybody have a profitable trading day, and I'll talk to you soon. Be well.